Well, hello there, folks, and welcome back once again to another episode of Southbank Live. Now, this will be the last episode of Southbank Live for a little while now. We're going on something of a summer hiatus, but before we get to that, I'll address some of that at the end. Welcome back. Good evening to everybody who has tuned in. It's great to do yet another one of these with the one and only John Butler. John, how are you getting on this evening?
Yes, very well. And indeed, I'm looking forward to my summer holidays, which are just around the corner now.
Yeah, it is very, very hot at the minute. I'm in Athens, and I must say the temperatures are rather toasty. But as I was raised in Scotland, I feel like I'm just making up for all the sunlight I didn't get when I was younger. So I'm putting up with it as best I can. But yeah, John, so much to discuss this week, so much going on. Just to start off on a more light-hearted note, could you tell us what your long and your short is for this week?
Look, this is the week or the month or perhaps the year, if you want to generalize a bit more, where the short of okay, I'm going to exaggerate. Actually, I'm not going to exaggerate. The short of the century has come into focus. So I'll start with the short.
Go for it.
And by explaining what the short is, then the long will become kind of self-evident. I think the short is basically all, and I stress all, of the EU institutions. I think every single one of them has become so obviously dysfunctional that they're probably beyond reform at this point. Without, put it this way, I don't want to completely rule it out, but the reform that they would have to go through would change them so fundamentally to leave them almost unrecognizable to what they are today. I think the EU has got absolutely everything wrong. I can't think of one thing the EU has done right now in so many years. And they just keep digging the holes. It's not just one hole they're in. Everywhere they go, they dig a hole that they can't get out of. And I've really come to the point now where I feel we're going to see a very prolonged period of terminal economic underperformance by the EU, and that of course will have social and political consequences that may be unpleasant. In fact, they already are. But I just don't see them turning this ship around. I really don't. So that's the short. The long, well, look, Europe in global terms is a relatively small, or the EU, I should say, is a relatively small part of the world. I mean, don't get me wrong, lots of people in very dense, sort of, packed together, but lacking national resources, lacking functional governments. I mean, how many governments have fallen recently? Lacking the ability to defend themselves militarily, lacking economic flexibility, lacking common sense. I don't see what it still has anymore to offer. Now that said, the parts do. There are parts of the EU that have a lot to offer. And so that's the long. You could
Okay.
say go long anything but the EU. Go long UK post-Brexit. Go long Russia post-Ukraine war. Go long North America, which has ample energy still. Go long Africa, which has actually been making some decent progress in recent years. But actually, the interesting trade, go long the pieces within the EU that are actually punching above their weight now, and go short the centralized bureaucratic EU institutions, which are sailing themselves off a cliff, in my opinion. There you go.
On your on your short side, John, you're referring to EU institutions. Are the specific institutions you'd be willing to share and examples of what's made you feel so terminally bearish on their existence?
It's just that they're getting everything wrong. I mean, and it's been building for a number of years. The EU Commission is now so out of touch with the national governments. The split has been getting greater and greater, or divergence, whatever you want to call it, has been getting greater and greater for a long time. And now you're facing a war situation where actually, multiple EU members do not think this is a good idea, and yet Brussels is acting as if it's a no-brainer and not even giving them airtime. And then you've got the ECB, which is now beginning to micromanage the never-ending debt crisis in ways that are in clear violation of the Maastricht Treaty. So the EU is violating its own foundational documents on both the fiscal side, the monetary policy side, and social policy. Look at the disputes between Eastern Europe and Western Europe around various forms of social policy. So it's the Commission, it's the ECB, it's the agricultural policy, it's the defense policy. Take your pick. I can't find one part of the EU that's doing a decent job nowadays.
Yeah, I think that's yeah, the short of the century may well be EU institutions. I think this week I'm sort of treading on a similar line for the short. As this is the last Southbank Live, we shall be doing for a little while, and so anybody who is watching this, do feel free, do share your long and your short, as we won't be doing these for a little while. I'm thinking slightly more long term than I would normally, but. I've come to the conclusion that, and John, you are a big fan of the country. You have spent a long time there. You know the language, but my big short would be Germany. In simple terms, what is going on is all their fault, and frankly, given the way they've behaved over the past 2 decades, I think they deserve it. I think what's going on with Russia, their empowerment of China, and their disregard for their own strategic autonomy in both energy and military, and their overriding arrogance in the face of all of this, Merkel's refusal to take any responsibility. I don't even feel sympathy. Like it's gotten to that point for me. My long, however, is sunshine, which of course we've been seeing a lot of. But I'm going to put a positive spin on it, as everyone wants to talk about how the heat waves are really, really bad. And of course, when we're thinking of the end of biodiversity in a lot of places, that is very, very bad. But there are some benefits. I have a theory that the whole reason why Scotland has such a enormous alcoholism problem, and that Canada and Scandinavia have such harsh restrictions on alcohol because they know what would happen if they didn't restrict it, and indeed places like Russia have such issues with alcoholism, is because the citizens just don't get enough sunshine, and so they feel miserable. And I think that's why. So with Scotland and Scandinavia, you see these totally different approaches where everyone can drink, and there's certain rules on it, but it's not nearly so strictly enforced. But Canada, it's all government-owned shops that sell booze. Scandinavia, very similar, but very high duties on it. It's different approaches to solving the same problem, which is that a lack of sunlight makes you feel pretty miserable. So I'm long on the sunshine this week. In the chat, we see folks who are Jason is long on holidays. Very good indeed, Jason. And John S from LinkedIn saying good evening, John Boaz. Good evening, John S. I am short the end of the Southbank Times and long its return. Well, that's very good to hear, John S. Hopefully, we shall be returning at some point in the future. Now, moving on to our first topic of the evening. Would be the great stablecoin summer that's taking place. We have the US dollar and euro hitting parity, something that a lot of folks didn't think was possible or wouldn't happen, because they were thinking that it's America is the one that's got all the problems, and Europe, though, it's just gonna flourish. But alas, no. We have €1 for $1 going on. There's a headline I'd like to share. I think it's from the Financial Times, which is just fleshing this out a little bit. Euro falls to parity with the US dollar for the first time in 2 decades, which is funny given how long the euro has existed. But yeah, John, what do you make of that? It's really funny. Just as a side, as an anecdote, there is a company called Circle. They issue stable coins in the crypto space. And mostly that's USDC, so it's a dollar on a blockchain that's backed by a dollar in a bank account, probably in London or in New York. And they started doing one for euro really recently, so it's EuroC or Euroc, and at exactly the same time as the dollar and the euro hit parity. So it's like, why did you bother doing it, guys? It's just the same thing now. But what do you make of it, John? Because it is quite a big event.
Well, I mean, it's symbolic, right? You could argue that currency fluctuations, when they meet various round numbers, 1 to 1, 2 to 1, 1.5 to 1, whatever it is, they it's more psychological. I mean, the fact is, currencies move for very good fundamental reasons, which are not easy to predict. In fact, they're impossible to predict. But looking backwards in time, you can generally understand why currencies rise or fall vis-a-vis one another. The story of the euro is an interesting one, though. And the reason is this: because when the euro came into existence, it was still a virtual currency. That is, it was still a basket. It did not exist as paper banknotes or coins in people's wallets, but it was run as a strict currency union by the European Central Bank. Now, that begins at the beginning of the year 2000. And so foreign exchange traders were already treating it as a single currency because you had to. There was no arbitrage between the banknotes of the various countries, between the coins of the various countries. Now, I'm going to elaborate on why that's actually changed now in a few moments. But the euro comes into existence, I believe, at an exchange rate of something around, as I recall, something around 112 or 115 to the dollar. Or the dollar is 112, 115 to the euro, excuse me. So the €1 is worth more than $1. But that situation changes quite abruptly. And between the launch of the euro and I think it's mid or spring of 2002, the euro depreciates fairly steadily, falls under parity, and I believe it's approaching about 0.9 when speculation begins that the European Central Bank may intervene to support the currency because they felt it was getting too weak. And they thought that perhaps that would become inflationary. And as a new central bank, the ECB wanted to establish its anti-inflation credentials. And so this speculation became relatively rife in financial markets. Now, my own personal view at the time, and I was working on a big trading floor in Frankfurt at the time, my personal view is that the ECB would prefer to solve the problem with higher interest rates rather than currency intervention. That was my personal view. And that was based on the historic behavior of the Bundesbank, on which the ECB was modeled.
Yep.
And so that I was sort of saying, hey, not only is the ECB out to establish credibility, they're out to establish that they are kind of a legacy of the Bundesbank in certain respects. As it happens, I was wrong. When the euro fell below 0.9, they came in and they intervened. They intervened in size, and they intervened with a unified voice. That is, prominent members across the euro area, Germany, France, Italy, Spain, members of their respective central banks came out and said, we all agreed on this. This was a unanimous decision. And so that was a big deal. And financial markets decided, well, gee, the foreign exchange intervention, actually, they will follow through with interest rate rises to back it up if necessary. Okay, we're not going to keep selling the euro. And that was the floor. That was the floor. They pulled it off. It's rare that policymakers are that good at this sort of thing.
Yeah.
But they did it. And I think they were able to do it because of the historical credibility and legacy of the Bundesbank, which was the foundation upon which the ECB was built. So, well done. Kudos. I was wrong. They pulled it off. Great. Fast forward to today. The euro has fallen a hell of a lot. It's now falling, or it's threatening to sustainably fall below parity. Does anyone think the ECB is still unified? Does anyone think that if the ECB starts doing, foreign exchange intervention, that there aren't going to be, some dissent in the governing council? No. No. It's a very different situation now. That was then. This is now. The euro was under attack then, and they were able to fight back. Today, I don't think so. I think that, in fact, the decision they announced today, which is that sure, we'll raise interest rates a tiny little bit from nothing, even though inflation is pushing double digits here. That's a drop in the bucket. And yet, at the same time, they say that they are progressing towards this, implementing this new facility to intervene as necessary to support specific government bonds. Look, that's an admission that they're willing to further undermine the asset base of the euro monetary, the asset base behind the euro monetary base. They're willing to dilute it even more if necessary to prevent a banking crisis. That's negative for the currency. It's absolutely negative for the currency. And did you see, I know I'm going on a bit, but you got to hear this one. Did you see the article written by Thomas Maya, former chief economist of Deutsche Bank, that appeared just over the past week? Because he was sensing the ECB was going to keep moving in this direction of being willing to buy specific government bond issues to help protect specific national governments under speculative attack, something the Maastricht Treaty strictly forbids. He wrote a really cheeky article basically saying, well, guess what? If the ECB is going to be disproportionately buying Italian, Spanish government bonds, say, to support them, but they're raising interest rates to control inflation, then the only way to offset the additional purchases of Spanish and Italian and other government bonds is to sell existing holdings of German bonds.
Yep.
So you're reducing the quality of your collateral while trying to keep the monetary base stable. And then he pointed out that Bulgaria, which isn't even a euro member, not officially yet, they're on course to join the euro, but they haven't yet done it. They back their domestic currency, the lev, exclusively with German government bonds. So he basically says, hey, the lev is now the stronger currency because it has the stronger backing. And so if Germany wants to retain a strong currency policy going forward, as per the original German Bundesbank charter on which the ECB itself was founded, Germany should adopt the Bulgarian lev as its currency.
Right.
Now,
you never know.
That's brilliant. That really sums it up. That's how far we've come. And that helps to explain my big short of the century. Go short the EU. They're on the road to disaster. Absolutely, at this point.
Maybe we should be long the lev. I mean, that sounds
well.
like
There you go. This is what I'm getting at. There are elements of the EU, and you could argue Bulgaria is one of them, that actually economically, don't get me wrong, they have issues. Who doesn't have issues nowadays? But actually, they're making increasingly good decisions relative to the bad decisions that they've made historically. The trend is their friend. Whereas within the core of the EU, it's precisely the opposite, and it's getting worse.
Yeah, it does feel like the pressure is reaching some level where you think, something's got to break. But John, Christine Lagarde, she says there's not a crisis, and you know what that means. It means there's not actually a crisis. That's why people say there's not a crisis. When I wake up in the morning, get out of bed, I look in the mirror and I just say, there's not a crisis, because you need to tell yourself that when there's not a crisis. It's just a very normal thing to do.
I remember a conversation I had with I believe it was the chief economist of a bank, and this is back in the 2000s, I think it was. And it's back when I was making a real effort to explain to people that the euro was not working out quite the way people had planned, and that there were growing signs of weakness and stress in the euro system, and that a crisis was increasingly likely. And he said, but bond spreads are low. That is, the spreads of Italian and Spanish government bonds to German bunds are very, very low. So the market is telling you there's a very, very low risk of a crisis. And I said, you're correct, but that's tautological. And the reason it's tautological is because when bond spreads widen and you're an over-indebted government needing to suddenly pay far higher interest rates relative to the rest of your currency area, that is not an indication of a future crisis. That is the crisis. So
Right.
saying that low bond spreads mean the markets don't see a crisis is tautological, because if they were wide, you'd already be in a crisis, right? So in other words, the bond markets cannot predict a crisis when the bond markets are the crisis if they begin to show it. And
Right.
that was my point to him. And I don't think he really understood that, but you realize that Italy's debt is not particularly long in duration. And if they have to spend an extra, 2, 3, 4, 5% vis-a-vis other Eurozone countries and don't have net monetary expansion, uh, I mean, it doesn't, they're going to have to completely roll over their debt roughly inside of that sort of time frame. And so again, it becomes the crisis itself. So this is not going to take much longer to play out now. The euro, as it's currently constructed, is not going to survive much longer, no matter what the ECB do at this point.
Damn. Those are fighting words, John. Fighting words. We do get a question from Anthony over on the Facebook side of the street. If the ECB attempts to support the euro, does it need the support of all those countries who use the euro? Where does the money come from to do that? Well, good question, Anthony. In terms of it needing the support of all those countries who use the euro, yeah, well, maybe the countries in the eurozone would like to have a say, but in times of crisis, you have to act, and asking for everyone's permission is not always, you just don't have time to do it. So, but where does the money come from to do that, John? What would you say?
Well, I mean, look, the power at the ECB to intervene to support the euro one way or another, that is either by raising interest rates or foreign exchange intervention, that power is, of course, the ECB governing council. And the ECB governing council is modeled on the Bundesbank, meaning that it is under no legal requirement to make any of its deliberations public or to make any indication at all. In fact, they're kind of they kind of forbid themselves from letting the public know precisely how their decisions are made. So you only know if a decision was unanimous or not unanimous if they say so. And there have been occasions in the past when they have explicitly said this decision was unanimous. And there have been many decisions in the past when they have said this decision was not unanimous. So, do they have a working process for resolving disputes? Is there some sort of concept of a majority? Is there some concept that the larger member states have a bigger say than the smaller member states? That's probably the case, but they have never told us what it is, and there's probably no way to know what it is. And of course, it's subject to change. Whoever's in charge can always change their mind. So the short answer is we don't know. However, I think what you could argue is that given that inflation is running at essentially double digits now in the euro area, I think it would be extremely unlikely that there would not at least be some countries already pushing very, very strongly for actions to bring inflation down. And of course, supporting to strengthen the euro would be one of those actions. So back to what I said earlier, I think it's inconceivable there is not huge dissent at the EU now. Huge dissent. And I think that again it will leak out. In fact, a little bit of it has leaked out. If you ask me, there have been some very strong words said recently by, among others, Bundesbank President Joachim Nagel. He doesn't come out right and say it, but it makes you wonder whether he did basically veto a recent attempt by Lagarde to railroad the governing council into writing a blank check for Italy. It sounds like anyway, that's me speculating a little bit around the margins. But this idea that the ECB would have to act unanimously, it appears in the past they have not always acted unanimously, and they're unable to act unanimously now, but that doesn't mean they won't act.
Right. Yeah, how far they can act is another question as well, even if they do decide to take extraordinary measures, which of course will be temporary and will not end up being permanent, of course. Another question on the EU institution side. I thought we could address this this show, John, was you were saying, we're short all the EU institutions, and I'm saying short all the German, short the German economy and all that. But this regards the EU defence policy. So just as Germany has been lacking in its own defence policy, the EU has been great at talking the talk about their own strategic autonomy, but not doing very much. But now they are trying to pass a bill where they can spend £500 million. The EU can spend £500 million on replenishing the stocks of arms to various member states that have been sent over to Ukraine. I think we have there is an FT headline here for that. Now, I don't believe this has been passed yet, but here we are. Brussels plans to finance joint EU weapons procurement for the first time. So it's a question of, in a crisis, you get greater integration, perhaps. That was the saying at the very beginning of the euro. Any of the issues that are created by giving everyone the same currency and the same monetary policy will be solved by closer integration in the future. And that was not publicly said, but some of the architects of the euro have admitted that. And it seems, following that course to get joint fiscal policy, they would then have some kind of joint foreign policy. And there have been various attempts at this in the past, but this is the first time that the EU is going for, the EU is actually going to the arms dealers and saying, I want to buy X, Y, and Z, and I'm going to send it to this, that, and the other member state. What do you make of that, John? Is this like a sign that we're going to the empire or bust stage? Upping the ante. Come on, let's see how much we can get away with here.
Look, as you mentioned, Boaz, I mean, the EU has made various attempts through the years to centralize various aspects of security and defense policy. Ranging from outright coordination of these brigades, right? These Franco-German brigades and other units that they were trying to put together that would have a centralized command that would be somehow run by the EU itself, to various financial initiatives this way or that way. Again, the history of the EU is the history of the EU trying to find ways to centralize against at least some resistance at the national level, and sometimes succeeding and sometimes not. But if there's one area where they have consistently failed to make real progress, it's in the area of security and defense policy. And so it's understandable, in my opinion, given that the EU has been historically repeatedly frustrated by attempts to make any progress in that area, that they're taking full advantage of the war in Ukraine to try and see if there's a way now to say, hey, well, if you're willing to help out in Ukraine, and of course you should, we'll go ahead and help you out with that with some additional EU funds. Isn't that nice? And so they're going to use this carrot to try and arrogate more security and defense power to themselves. And who knows? It might work. Past attempts have not worked so well, but this one might. That said, there is clearly dissent within the EU regarding just how much help, if any, the EU really should be giving Ukraine in this matter. And so I think there's no way you're going to get unanimity around this proposal. I can name a handful of countries that will likely not go along with it. I mean, Hungary in the forefront, probably. Slovakia possibly also not. Greece is a bit borderline at times on some of these decisions, and anyway, I mean and same for Bulgaria for that matter, which has a very, very difficult relationship now with trying to play off. It's essentially surrounded by NATO, and yet it's right next to Russia, and they feel very sort of endangered all around. So they find it difficult to go along with anything that would be seen as too provocative by the Russians. Anyway, so the point I'm getting at is that the idea that the EU is going to make much progress here, I think is unlikely. And again, what are we arguing about? We're arguing about one of the world's smallest defense budgets per capita as a percentage of national income. How meaningful is this? I mean, okay, so we're going to give a few magazines more ammunition to the handful of people who actually know how to use a rifle. Look, okay, fine, I'm being a bit cheeky here, right? But that's kind of what we're talking about. We're going to give you enough money so your army can spend an additional 3 weeks holding out in a retreat before they have to fully surrender. This is kind of what we're talking about here. It's not very meaningful, really. Politically, it's symbolic, I suppose, and makes the EU feel important, but I don't think it means anything on the ground.
Yeah, I just wonder if it's the thin end of a much larger wedge. I mean, when you're starting out with this kind of policy, you wouldn't want it to go huge. I don't think. More like test the waters. This is almost like a trial balloon, perhaps. For imagine if they do this once, and it's like the EU doesn't have any formal policy on aiding, military aid to Ukraine, but all it's doing is just buying lots and lots of arms, which is then refilling the member states who are aiding Ukraine. Something like that.
Look, I mean, Europe does have a large arms industry. It's just that most of it's exported, right?
Yeah.
And let's face it. Historically, Europe was particularly good at beating its brains out with advanced weapons. They did that repeatedly through centuries, and they led the way globally in weapons development, for such a long time. And they retain that legacy. And okay, fine, you can say good on you, or gee, that's awful. What a horrible industry to have led development on for so many years. But they have that legacy, and I can imagine, although it might happen behind closed doors because it might be seen as politically incorrect, that the big European munitions manufacturers have been lobbying heavily for this sort of policy because they're the ones who obviously benefit.
Yeah.
That might seem a bit cynical, but I can't imagine it's not true.
Well, why else would they be lobbying for it? I mean,
So they're the real beneficiaries. I mean, gee, isn't it nice to make a lot of money selling rifles to an army that's guaranteed to lose? I mean, where do I sign up?
Oh,
Sorry.
Liam comments, I'm long on England winning the World Cup and short on the sterling exchange to the Australian dollar. It's almost double bubble at this point. P.S. Please come back soon. Well, Liam, a very good long short, and thank you for your kind words. It has been great seeing you on numerous occasions, giving some interesting questions here in the chat. And hopefully at some point in the future we can do one of these again. Richard says, it wasn't that long ago, I remember you telling us you drank nothing but beer for a month. Yes, indeed, Richard. Lent 2021 was quite an experience. Not sure I would recommend it, however, to any of our viewers. Stephen is long on politicians' lies and short on the truth. Very, very cynical, but I can't really doubt you there, Stephen. Now, on the topic of, we shall get to the topic of gold, and I think we shall indeed get to the topic of. We'll maybe get to the topic of who's going to be Prime Minister. We did speak about this a little bit last time, but the horses have thinned somewhat. So I think that's maybe something to talk about later on. Luca asks, what language would the EU soldiers use? Good question. Probably English, but I imagine the French would feel very, very left out if they weren't speaking some French. But yeah, I would imagine English. John, have you ever seen that table for what the EU army would be speaking?
Well, it's interesting you say that because I think the best historical model we have for what a unified or somewhat unified EU army would look like is probably the old Austro-Hungarian Empire. So the way they administered that empire, which was of course a European empire primarily, was they had units that all spoke the same language. But as you went up the chain of command, you would have commanders who were multilingual. And so they would be able to control multiple units under their command, giving orders as necessary in different languages, but it would be a unified command. And I suspect that that's how the EU would do this. That is, that they would borrow very much of that old command structure of the Austro-Hungarian Empire. Now, as if you know your history, you know that the Austro-Hungarian Empire did not do very well at all in the First World War. They were very ineffective, and their command structure did not function well, and they had huge casualties. They made lots of bad decisions. And anyway, before that, however, if you go back, well into, if you go back into the 17th, 18th, and early 19th centuries, that system actually worked okay. So there is historical precedent for that sort of system working, more or less okay. But anyway, I don't know whether the EU would take solace that there is some historical legacy of that sort of system working, or whether they'd look at how the Austro-Hungarian Empire fared in World War I and say, "Oh my God, don't go there." But I suspect that's how they would at least get started, using that as an example.
That's interesting. That's very interesting. Yeah, I'm probably just speaking as a Brit to say that they would speak English, just from the who they'd be using to train such a force would probably speak some English, unless you just relied on the French, of course, who are very good at that kind of thing. And of course, you've got the French Foreign Legion. Everyone, doesn't matter who you are, where you sign up from, you've got to speak French in there. That would work a bit. Robin suggests Esperanto, which is a very good idea, Robin. Maybe it's the EU military that's going to bring that idea back. Maybe. There is, we do have Robert is long on art. Sotheby's sold for 35k a 1999 gallery artist show catalog estimated at 2k this Tuesday. Damn, I mean, wonder what that show catalog was. That'd be quite interesting, Robert. Gerard comments, Europe will be forged in crises. Well, maybe all the bad news that John is talking about, in the end, Phoenix will rise from the ashes and Brussels will ascend to the heights of the Austro-Hungarian Empire, possibly. Steve Boyle says the language would be gobbledygook. It is very interesting, John, the Austro-Hungarian Empire idea. It would fit the EU that the officer class would be multilingual. I mean, that's a lot of how the bureaucracy functions already with the folks who get positioned in various places in the EU, because of course you get to pay a lot less in income taxes if you are from the EU, but you work in a country that is not EU. That's a very nice loophole they put in there for us. There is one final headline I would like us to cover a bit, and we are once again looking at the Eurozone. This headline is regarding what's going on in France with the nationalisation of EDF. It wasn't too long ago that EDF was issuing century bonds, which I thought was absolutely nuts. But France is nationalising EDF for 9.7 billion euros, which I think goes to show just how wild the energy crisis is becoming in continental Europe. Yeah, John. I mean, if I was one of the bondholders who bought a 100-year debt for EDF, I'd probably feel pretty good now. Sounds like I made the right trade. What to say? It seemed pretty ridiculous to me. Anyone buying a century bond, but now actually, good idea, huh?
Look, I mean, energy companies are so strategically important to their countries, and this is certainly true of France, which is very proud of not needing to import much in the way of energy because they are so self-sufficient because of their incredible nuclear capacity. And of course, that nuclear capacity is basically EDF. And so, look, if EDF gets in trouble because there are laws that make it difficult for them to pass on price increases to consumers and deal with what is now a general European energy crisis, the government comes to the rescue. It doesn't surprise me at all. And so, yes, if you were taking risk in the venture, but the government comes to the rescue, then you are a beneficiary of that rescue. And there's just no way they're going to let EDF go down. It's a crown jewel that the government has invested a huge amount of money in through so many years now, many decades. So it is. And indeed, to have said that it was a private company in the first place, it was never really private in the sense that we think of as capitalist free market private, right? It was a state licensed monopoly that had a certain amount of autonomy, but wasn't strictly owned by the state. It was owned by the public at large. But in practice, it functioned throughout as a state licensed monopoly, right? So this is almost, this is going to exaggerate it a little bit, but it's almost as if it's an accounting convention to change the strict way in which the balance sheet and income statement and whatnot are prepared from one method to another method. There's not a whole lot in it. So I mean, it is a bailout, but does that fundamentally change the nature of the company from the way it was already operating? Not really.
Right. But in terms of what it says about the energy crisis at the minute in Europe, John, Last episode we did of this, you were talking a little bit about the possibility of a ceasefire leading to something of a relief rally in markets, and what you would suspect would lead to a fall in energy prices, and release some of the screws that are currently crushing consumers in Europe. Where do you think we are with that at the minute?
Well, I mean, there has been a bit of a relief rally, right, in stock markets. I mean, we've seen some big days higher very recently. So that's kind of playing out, and yet there's not a whole lot of positive news on the war front. When you look at energy prices, they bounced back higher again, but you could argue that that is a response to Biden's trip to Saudi Arabia, which doesn't seem to have yielded much in the way of results. In fact, you could argue it's yielded the opposite. That is, it's kind of demonstrated to the world that the rift that has already been growing between the U.S. and Saudi Arabia is growing even larger. And other factors equal, given the U.S. of course is a huge energy consuming nation, that it could be the case that if that relationship continues to sour, the Saudis will be more willing to work with Russia and other big producers to keep prices high. So I think that may be why we saw oil prices in particular bounce so much over the past couple of days.
Yeah, not too much in relief in sight then for the European energy consumer, you would say.
Look, not in the near term. The problem with what's happening in Ukraine is I do believe that a ceasefire is more likely than not. And yes, that would lead to some relief rally in oil prices, but I'm not sure how big it would be. And the reason why is because what we just discussed, that is the Saudis aren't necessarily going to be easily swayed into increasing production, and indeed their ability to do so may be limited. And just because there's a ceasefire, Russia's oil revenues right now are through the roof. Are they going to suddenly want to produce more if there's a ceasefire? Not necessarily. So I think we may be kind of stuck here. Yeah, hostilities may calm down a bit, but I'm not sure that automatically brings oil prices down,
Yeah, yeah, I would agree with that.
and
It does
and gas
feel,
prices for that matter. Um, uh, Look, I think the gas price thing is more specific to Europe, and that requires, in my opinion, this is a slight tangent. That requires, in my opinion, for Russia to see the EU finally blinking on some of these sanctions, and then they'll turn the gas taps back on. That's a very specific issue. That's less a global energy issue than a Russia EU gas pipeline transmission issue, which is a subset of that.
right. It does feel like some of the psychology is at play with high prices leading to higher prices when it comes to consumer behavior or even buyer behavior when it comes to energy. But then, of course, it gets to the point where when does this start killing demand for energy in general because people simply can't afford it and they're getting
One
squeezed.
interesting thing to point out is that many countries in the EU now have active public campaigns through the media to try and prepare their populations for a winter of high energy prices and potential restrictions on supply. And that's a big deal. So they're already kind of laying the ground for, we're going to have to ration gas, we're going to have to ration electricity. We're not going to allow you to keep your home thermostat above, I don't know, 18 degrees Celsius or whatever it is they decide on. That has already begun. So they kind of realize that there's probably no quick way to solve this problem and to get gas prices down. They're kind of realizing it's going to be tough now. But if some sort of deal is done, there may be things that can be done to bring gas transmission back online. But as it stands now, Russia's saying, look, as long as you keep these sanctions in place, forget it. So
Maybe this week I should have been long on journalists or, well, articles on the medicinal effects of cold showers on the human body. I feel they are imminent to some degree, and there's plenty of science backing it up. And they are good for you in the end, whether or not you enjoy the experience or not. especially if you like to drink or anything like that. So yeah, I think maybe if I can get an extra long this week, it would probably be on those articles. We do have quite a few questions on gold. So Josephine asks, John, what is happening with gold? And also on the fate of gold being the anti-dollar. This from Stephen. Is gold now the anti-dollar? Do we wait for the dollar index to fall before buying into gold, or is it now cheap enough? Michael asks, do you buy the dismal performance of gold as being due to the increased interest in bonds? Quite a few questions there. But yeah, John, is what's going on with gold, and is it the anti-dollar? We'll start with those two.
Well, in a way, by definition, gold is the anti-dollar because the dollar underpins the global fiat reserve currency system, and gold is an alternative to that system. Also, of course, gold trades in dollars. So if you simply look at the dollar gold price, then you're kind of constructing your variable in a way that's already biased towards that. Whereas if you look at gold in basket terms or currencies that aren't the dollar itself, gold behaves very, very differently. So anyway, I do think, however, the short answer here is that gold very much is effectively an anti-dollar. And so when you see gold trading badly versus the dollar, you have to ask yourself why. And again, part of the question answers itself because the dollar is strong across the board, with the exception of the Russian ruble. But there are reasons, of course, we've already touched on why the ruble is doing fine, because Russian energy revenues, export revenues generally, are through the roof. So what else is going on here? And I think what's going on is in certain respects similar. I mentioned this before. In certain respects similar to 2008. There is a general liquidity squeeze underway. There is a general growing expectation of sharp economic downturn underway. Expectations across the board in major economies are for negative economic growth now for at least a quarter or two, perhaps longer. And so the idea is that you've got to flee flee out of risky assets into liquid assets, and the underlying risky asset base of the global banking system is certain government bonds, in particular dollar, U.S. Treasuries. And this happened in 2008, and to put the squeeze on gold, because basically you have to liquidate whatever you have to liquidate when the bank tells you they're cutting your credit line. And you either are able to put up collateral that is seen as risk-free, that is government bonds, or you simply have to sell your positions, and that could be gold. So I think gold is caught in a general global liquidity squeeze. So I think there's one or two ways in which gold gets out of this correction, which is quite substantial now in dollar terms. The first is that the dollar remains strong, but gold begins to rise nevertheless because risk aversion continues to increase. Now, that hasn't happened in recent days, and so that helps to explain, in fact, why gold got this most recent leg lower, because you have seen a bit of a relief rally in risk assets. Yep. But if risk assets start to come off again, gold may get a bid again, even if the dollar remains strong. The second possibility, in my opinion, is that the dollar finally does begin to weaken, and that's my longer term, almost certain choice. At some point, this liquidity squeeze is going to affect the U.S. economy so severely, the Fed is going to have to step in and flood the market with liquidity, just like it did in late 2008 and 2009. That propelled gold very dramatically higher back then, very dramatically. And I think it will propel gold dramatically higher again this time. And given the starting point today, how far gold has recently corrected, I think that the size of the gold rally that we could see when the Fed makes clear they can't keep tightening, and the dollar, it responds to that by declining, and as a general rule, non-dollar assets can recover, gold will lead the way. And it will lead the way by an order of magnitude. Gold will lead every other recovery, every other non-dollar underlying, in my opinion, will be outperformed by gold.
Now, on the topic of the performance of gold being driven by the higher demand for bonds right now, as we are in an inflationary rising rate environment.
Yeah.
You would agree. I mean, that's one of the reasons, perhaps.
Yeah. Look, bond prices have been falling, or not until very recently. They've recovered, fine, but they had been falling. And of course, that's the natural reaction to expecting higher interest rates. And so, I mean, they were underperforming, and you might say, oh, doesn't that reflect declining demand for bonds? Well, you have to look at it in relative terms, because if you look at other long duration assets, such as equities were doing just as US equities, if we're talking about US bonds, US equities were doing just as badly, if not worse, than treasuries were. They were both selling off. And that's actually normal. You have a triangle of assets where you have the currency, you have the bond market, and you have the equity market in that currency. And it's very rare that you get what traders call three-way selling. That is, that the currency and the bond market and the equity market are all selling off at the same time. And in fact, that's normally only observed when emerging markets are approaching or in balance of payments crises. So that's when you see them. Otherwise, they don't normally show up. And so we haven't seen that with the dollar. When we had bonds and equities selling off, the dollar was still strong. And in any event, the point I'm trying to get at is this, is that bonds might have been selling off, but they weren't selling off disproportionately. And so to say that the relative demand for bonds was coming off, I don't think is correct. And in fact, the amount of debt, of course, that the US is issuing is huge. So, I mean, the demand is still there. It's demonstrably still there. And even as prices were falling, the demand was still there because of all the new issuance that was still going out when prices were falling. So I don't think it's correct to say demand for US bonds has been falling outright. And guess who the biggest buyers have been? The biggest buyers have been US commercial banks. They've been taking up all the new debt issuance, even if prices have been falling. Why? Because they're not making new loans. There's no demand for new loans in the US right now because the economy is slowing so abruptly. And indeed, there's no demand for new loans anywhere in the world right now because the global economy is slowing so dramatically. So who's hoovering up all those bonds? It's the commercial banks. They have to put their money somewhere. They're not going to hold cash in a vault. They don't do that. It's always going into some sort of asset. And if it doesn't go into a loan, it will go into essentially risk-free debt, which is government bonds. So that's where you see the demand, and that is supported by all the liquidity creation we've seen in recent years.
Right. Now we are getting on a little bit for time, so I think us turning perhaps to the domestic state of affairs here in the UK. Anthony asked, how do you both react to the possibility of Liz Truss being in number 19 from a financial point of view? Now, I don't know what goes on in number 19 Downing Street, but I'm guessing that is maybe a small typo. And sorry, I think my mic turned off there. In terms of what goes on, number 10 Downing Street. Now, I do have quite a few reactions to this from other folks in the chat. Some people are not a big fan of Liz Truss. Other people are more interested. In terms of where you currently see it with Truss and Sunak, John, have you any thoughts, any observations on the situation?
Look, I will just say this. I think Rishi Sunak is making an attempt in a, however, sort of palatable way, an unattractive way, to try and be honest and direct with his party regarding the state of government finances, right? Following all the COVID largesse, et cetera, which he oversaw, the country's finances are in very poor shape. And so he's at least trying to kind of be honest about that fact, and therefore avoid promising generous tax cuts right now and that sort of thing. But that is politically unpopular, and I think it gives Truss an advantage, because she can say, well, look, I mean, you were the one that threw all this money around, and you're fine. So you're owning up to your own mistakes. So I think it kind of gives her a rhetorical advantage a little bit. That doesn't make her any more honest in terms of saying that, oh yeah, sure, we can cut taxes, no problem. I mean, politicians do that all the time. It's a vote getter, especially for the Conservatives historically. So I can see why she's going there. Who do I think has the better chance? Look, I'm not a political analyst. What do I think the result's going to be, and what does it mean for the country, and what does it mean for financial markets? I will quote one of the all-time great rock and roll bands, The Who. Meet the new boss, same as the old boss. I don't think that this particular race for the leadership is going to have any meaningful impact on the state of UK government finances or the state of UK financial markets. I really don't think it matters. There are larger forces at work, and I don't think whether the person occupying number 10, is Rishi, Liz, or almost anyone else at this point makes one iota of difference.
The more
Sadly.
things change, the more they stay the same, perhaps. But John, if you were a betting man, any would you feel free to share which horse you would back?
All right. Look, again, I'm not a political analyst, but if I have to guess, I'll say that because of the legacy issues, I think Liz has the upper hand. I think there's a lot of legacy annoyance and anger at what Rishi did while he was in office. So I suspect Liz has just the easier path to win this one. But that's just a guess.
Oh, that's fair. Fair analysis. Fair analysis. Robert says that Rishi cheated the pensioners out of £10 a week that they'll never get back, dropping the triple lock. They'll always be £10 down till the end. Yeah, indeed. And of course, with pensioners, well, they are pretty good at voting, even if they're not, working or anything like that. And that, of course, is very big part of the conservative electorate. So definitely definitely fair observation. Gerard comments regarding the energy issues we were talking about, how the Kingdom of Saudi Arabia is performing like the ultimate arbitrage trade by buying cheap oil from Russia and then for its own citizens, and then selling all of its own oil to the West. Yeah, I mean, fair play. I mean, it is. Somebody was going to take that arbitrage, and the Saudis are kings of the oil market, so why not? But when you were talking about how the U.S. and Saudi Arabia were not getting along nearly so well, John, is this the kind of thing you were talking about?
It's part of it. It's part of it. I think this has been going on for a number of years now. That is, I think the Saudis have sensed for a long time, in particular, once it became clear that the war in Iraq had not gone particularly well in terms of truly building regional stability and making the Saudis' world a safer place. I think they probably hoped it would, but it didn't really. And we're just going from one war after another in the region, and the Saudis are always in danger of what they call this Shia crescent of Shia power across the region, the Saudis being Shiites and whatnot. And so I believe that the U.S. Saudi relationship is built on a very simple proposal, which is the U.S. provides protection, and the Saudis provide oil on terms that satisfy the United States. And so the fact that the U.S. has been struggling to provide the sort of protection the Saudis would like makes them consider other options, whether having more flexibility as a somewhat more neutral power could be beneficial for them. And I think Mohammed bin Salman in particular, if you read his comments carefully, he's been hinting at this ever since he came into power. And so the fact that the Saudis meet far more frequently with the Russians than they used to, the fact that the Saudis are clearly willing to openly make fun of, in some cases, and tease U.S. leaders at times in their own press. They never would have done that before the Iraq War. It would have been unprecedented. But now it seems to kind of be normal. So this has been going on for a long time. And I think that it's, you could say the real signpost here was the chaos in Afghanistan when the U.S. left, suggesting that if they really feel they have to just go, they just go. And I think that probably raised a lot of eyebrows in Saudi Arabia, that they need to start accelerating this process of reducing their dependency on the United States for their security. And therefore, the fact that they're recycling Russian oil now, not only is that necessarily a snub in the face of the U.S., but guess what? It's also a big favor to the Russians. Come on, you got to look at both sides of it.
Indeed.
Right? It is a sign of Saudi Arabia cozying up to Russia, in my opinion.
And Robin comments in the chat, only Russia can keep the Saudis safe from Iran, which is an interesting way of looking at it.
It is indeed. It is indeed. Yeah.
Now, we are getting on for time, but one last comment, John, as this is our last episode for a while ago. And this is from Natalia, who says, "Good evening, Natalia. Great for you to be here. Could it be the case that for certain governments in the Western world would follow the French example of nationalising EDF, and we are to expect further nationalisations in the near future?" Do you think we're going to see more of that going on, especially in the energy space, as this crisis just kicks off?
Look, as I mentioned, with respect to EDF and its relationship with the government of France, the state of France, all of the big national energy companies from inception, you have to go back, right? There are a couple exceptions like Standard Oil, but that's way back in history. Most European, anyway, energy companies have had an intimate relationship with their home government from the get-go.
Yeah.
And so the idea that this public-private, yes, okay, fine, the ownership structure of the company may change, and that may benefit some shareholders or bondholders at the expense of others. It may benefit customers, or it may benefit producers, one at the expense of others from time to time. But the basic governing structure of these companies and the ways in which they operate day to day doesn't change a whole lot, whether they are heavily regulated, effective, licensed national private monopolies, or whether they are heavily regulated national public licensed monopolies. There's not a whole lot in it. So if you, however, are an equity investor and you face a nationalization at a price which you don't think values the company fairly, you're losing out. Absolutely. But that is largely an accounting item. The value of the company is being transferred from the shareholders to the banks and the bondholders.
Yeah.
That's what's going on.
Yeah, I think that's a fair summation there. Hopefully that answers Natalia's question. Now, we are getting off time, so I think we shall end it there, folks. Just in general, we are taking a summer hiatus with Southbank Live. It has been great running these. We're now on, I believe, our 51st episode. And we've had a great time. It's been great speaking to so many of the Southbank readers in the chat, with plenty of folks coming on regularly. I can recognize quite a few of the names in the chat. We've had a great time. And this has been a real joy to do, but we shall be going away for a while. If you'd like us to do more of these in the future, you're watching a recording of this, do feel free to leave a comment below saying what you liked, and indeed certain elements of it that you'd like us to bring forward in the future if we are to carry on with Southbank Live. That would be fantastic. I see that Liam wants us to say "Hasta la vista, baby, I'll be back" at the end of the show, but I don't feel that would be quite fitting or something that I would say. But given my short for this episode is Germany, I think I'll say "Auf Wiedersehen," as it does mean until I see you again. But John, any closing remarks before we end this one?
No, just that I've really enjoyed these episodes up to now, and I am looking forward to my summer holiday, but I do hope we can restart very soon.
Well, there you have it, folks. Thank you all so much for joining in. We've had a fantastic time. It's been great speaking to you all through the chat. So we'll see you in the next one, whenever that one is. But in the meantime, I hope you all have a fantastic summer, and enjoy yourselves, as there are a lot of things to be worried about at the minute. But of course, it is summertime, so relax as best you can. Bye bye.